Hello, everyone. Welcome back and Happy New Year. And hopefully, all of you have a very, very good holiday and looking forward to 2023 New Year's resolutions in terms of your real estate goals and objectives. And welcome back once again. And this is Si Wing Yi. And this is my first video of the new year. And really, yes, to me, I'm very optimistic, I'm always very exciting about the future and even the past. So just be optimistic, have a positive attitude, and stick to your real estate goals. Invest for the long term, and everything should be fine. All right. Yep, 2022 was a great year for me in terms of providing high quality, good content videos about real estate and real estate investing in general. So hopefully this will continue. And so without further ado, let me go ahead and share my screen. And my first topic of the year is per the Mortgage News Daily website here. And the first article dated a couple of days ago, December the 30th, Friday. And the headline is Rates Heading Higher to end 2022, but 2023 is a blank canvas. What does that mean? Well, we'll find out. All right, so let me go ahead and highlight what this article is talking about. But before we begin, just so you know, the 30-year fixed rate um, uh, for people with good credit or approximately 6.54%, which is 4 basis point higher than a few days ago. Yep, so that's where we stand right now. And let's dive into the article that are written by Matthew Graham. And he said, so long, 2022. Don't let the door hit you. This guy being a little bit funny. You were you were the worst year for mortgage rates, as in 2022, the worst year for mortgage rates that most of us have seen in our lifetime in terms of the pace of the rate spike. That means these psychological effect of having uh, going from a mortgage rate at the first quarter of 2022 around 3.5%, and the rate spike skyrocketed to in the next few months to 6 and 7%, with the highest rate around October of higher than 7% fixed rate mortgage, which is having a very psychological effect on a lot of American consumers out there, and I'm sure you'll agree. So this writer of this article said, sure, our friends who have more, quote, life experience, quote, are happy to remind us about their double-digit mortgage rates in the 1980s. But that was then, and everything's relative. All right, he's referring to me and myself being a baby boom generation. When I was a young adult, I did experience mortgage rate back in the early 80s of around 18%. So I will counter this author's comment that is then, this is now. Well, I can only speak with history, in that from 1980s, throughout the 1980s and 1990s, the mortgage rate were anywhere from 8 to 18% until the year 2000, when the interest rate came down to around 6 to 7% throughout the 2020s. And then, of course, I will go over the interest rate, the situation. So the way the way I feel about it is we've been spoiled. Okay, we've been spoiled by this very, very low rate in the past 10 to 15 to 20 years. And when this once in a millennial, once in a historic 1,000 year history of the earth or longer We have never seen such a low rate that we've seen back in 2021, around 3% or lower to some people. So we will never see that again in our lifetime for sure. Another 3% 30-year fixed rate mortgage, which created all this, all this volatility and pandemic and so much behavioral modification among many people. So anyway, I'm just giving you my 2 cents, okay? So it's not the end of the world. The sky is not falling, all right? So you have to think long term. Okay, let's get back to this article. Again, this author said this past 18 months has been the quote second worst rate environment ever, end quote. And doesn't really make anyone feel any better. Yeah, I get it. Yeah, this sticker shock, this rate shock is causing a lot of adverse psychological effect on home buyers, potential home buyers, real estate investors alike. But I have my own philosophy. I'm not going to share that on this particular video, but if you search my YouTube channel, you will find hundreds of videos that I have done, especially this past year, and embrace my core value and investment philosophy with respect to real estate. By the way, I've been owning real estate for the past 30 years, and I'm a real estate investor. Okay, I'm not a local realtor for in any particular market in the U.S. I just help investors to buy cash flow properties, out of state, remote cash flow, turnkey, low cost, high cash flow properties in the best markets in the country. And all I can say is the Midwest, South, and Southeast is the best areas to do this. All right. So anyway, let's get back to this article. So he said that this author said perhaps is some small consolation to think that 2022 as the bill that came due for the massive household mortgage market party that took place in 2021 and much of 2022. I think the way I interpret this particular sentence by this guy, Matthew, maybe Matthew is a young millennial or something. He had a little bit of negativity because maybe he's jealous that some people that have become a homeowner in these past 2 years and did very well. Perhaps he did not. So who knows? Sounds like a sort of a negative comment. But then again, a lot of people share his comment, stating that the bill that came due. Now the next sentence I really embrace this, and my biggest takeaway from this particular article by Mortgage News Daily, and here it is. The first thing is the average home appreciation. No, the average home appreciated by roughly 40%, even after this is a head scratcher. Okay, so look at this. This is absolutely head scratcher. So I know it's a reminder that for those of you that pull the trigger, that purchase a primary home or rental property in this past 18 to 24 months, well, I will congratulate you. Please comment below, how was your experience for those that purchase homes. I know not all of you have a positive experience, but most of you have. And the reason why is, look at this, according to Federal Agency Home Price Index, look at this chart. From ever since the pandemic began, when the Federal Reserve has lowered the rate to around 3% or whatever in around March, April of 2020. Look at the skyrocketing and then it created this post-pandemic boom in many markets in the country. Look at this skyrocketing of home prices that began around the middle of 2020 when the pandemic began, all the way until maybe the first quarter of 2022. In a space of 18 months or so, give or take a few months, the nationwide home prices has increased to 39%. This is not only historical, this is, I don't know what else to put it. This is mind-boggling, this is historical. It has never happened before in a 2-year span. The average appreciation rate, historically speaking, for the past, who knows, 100 years, or maybe even longer, is around 4 to 6%. That's the average annual home appreciation on a historical basis. And in a mere 18 months or so, on the average, we have achieved around 40% home appreciation between the middle of 2020 to around the first quarter of 2022. So, again, this is a once in a lifetime phenomenon. This is a once generational phenomenon. Okay, there some correction going on in certain markets in the U.S.? 10% price reduction, 50% price reduction in many of those boom and bust market. And who knows? No one have a crystal ball. Some people still claim that the homes will continue to drop the first or second quarter of 2023. It remains to be seen. So all this price appreciation the current homeowners achieve, well, some of you have a slight reduction moving forward according to some so-called expert prediction, but that's the way it goes. And who knows? But I'm feeling much more optimistic. Right. So let's get back to the article in question. A whopping 39% appreciation. This is my takeaway. This is so almost 40% appreciation in a mere 18 months. I would have to say, if you bought one property, that's great. I mean, you won the lottery. Some of our investors have purchased per individual around 3 or 4 or 5 rental properties in good markets during this time frame. And for that, I congratulate you because you have essentially created a generational wealth for yourself and your family and your children, even your grandchildren, for the next generations to come. As long there's a big catch, there's a big caveat. As long as you hold those property. By the way, one more takeaway you need to understand: do not sell your property, no matter what, unless you absolutely have to. It's all about buy and hold. This investment philosophy have done well for many home owners for decades and millennials. Okay, do not sell, buy and hold for the long term. For the most part, okay, there are exceptions. Okay, so if you learn nothing else, just follow my philosophy. Buy and hold for the long term. I've done it for 30 years. I have many rental properties, and my properties have grown over the past 30 years. What a ride. All right, so getting back to this. All right, so yeah, I know there's some corrections in the market is due to happen. Some markets like Las Vegas, Austin, Phoenix, and California have seen some price reduction in the past 9 months, around 10%, some 15%. But hopefully, the past is behind us, according to this article. I think the past is behind us, and especially if the interest rate does not go higher than 7%, who knows? But a lot of 2023 predictions, which I cover on my recent videos by Zillow or Realtor.com or National Association of Realtors or Redfin, they are pretty optimistic. They say the interest rate, the mortgage rate, could be anywhere from predict for this coming year, 2023, around 5.5% to 6%. That's the ideal situation. All right, so let me say what else. Another takeaway from this article: home sales exploded to levels well above anything else seen during the past decade. As you can see by this chart, yes, home sales has increased dramatically as a result of the historical low interest rate, especially 2020 and 2022. But now, as you know, for the past 9 months, the home sales pending sales, home sales, everything has decreased dramatically because of the higher interest rate. But by no means we're going through a real estate crash. I know some of you are hoping for a real estate crash so you can buy property at 50% discount. So if you, this is to me is a very unrealistic expectation because according to various sources, including Redfin, the nationwide, as we speak, don't quote me exactly, but there are around 3.3 months supply of homes. And in order to have a balanced market, you need to have around 6 months supply of homes inventory to have a healthy market. And now we are still, from a historical perspective, have a very low inventory level. 3.3% is still almost historic low in terms of supply of inventory. So therefore, we may see some slight corrections in the first and second quarter 2023, but beyond that, if the interest rate goes come down to 5 to 5.5%, we can see perhaps some buyer frenzy, and because demand is going to exceed supply. The supply is still on a historical low, as based on the trends that I've seen with the very homes available for sale, and sellers are not selling. The builders now building enough homes, so we're going to see a very shortage of homes, which will create a good real estate market for the future, and so forth. That's my strong personal belief. Rates, okay, number 3, rates have plummeted well into the all-time lows, back in 2021, and stay there for much longer than previous stint. Well, Federal Reserve, when they lowered the rate to a historical low back in at the beginning of the pandemic, they kept the low interest rate too low. They allow the home prices skyrocketing because of low supply of homes, high demand. We see multiple offers and bidding wars throughout the country in 2021, and therefore housing prices have increased so significantly. But then, Federal Reserve took too long to increase the rate to fight inflation. So that's why 2022, for the most part, with a higher interest rate, causing a lot of market volatility and correction, as we are seeing right now. All right, so here are the graph. You can see during the past decade, the fixed rate has been, the rates has been pretty nice until the pandemic hit, and this 18 months timeline with the historical low interest rate are causing a lot of challenges, needless to say, and the skyrocketing of interest rate and at this time. So that's what we are seeing right now. And then let me see what else. I'm almost done. Number 4, even if we shift gears to the stock market, we find gains of almost 50%. The stock market have done well during the pandemic. Even after the crummy 2022 stocks, we are still roughly 20% from pre-COVID levels. You see right here. So stock market, I know there's a lot of stock market have gone south really for the past few quarters, but still, if you look at from this long-term perspective, the last few years, stock market, according to this mention, has still done pretty well. All right, so all that to say, yes, 2022 was awful in several ways, but if we add it together with the previous 2 years and divide by 3, some might argue that is a fair price to pay. Okay, so okay, all right. So I'm coming toward the ending of this video. Core consumer prices, inflation, right? The Fed is trying to fight inflation. They try to tame inflation. That's why they have to raise the interest rate and the federal funds rate. So the 10-year Treasury bond, that's what the Federal Reserve look at to raise the interest rate. So we're getting some positive news in the last few months that the inflation is subsiding. So if the inflation is subsiding, most likely the Federal Reserve most likely are not going to increase their rates beyond the current rate of 6.5%. And hopefully we have a slight reduction of rates gradually in the 2023. If that's what happened, then we might be back to a very, very good, healthy market, and people can still feel very, very good about it. So, and the Fed said is the reason why is an over tighten, push the rates higher than they really need to. The Federal Reserve have pushed the rates higher than they need to because they want to tame inflation. But as long as they feel the Federal Reserve and Jerome Powell, as long as by pushing the rates so high and so quickly, as long as they do not see that the economy, as long as they're not bringing down the economy, okay, and so far, you could make the argument the interest rate and the Federal Reserve rates hike by Jerome Powell have not really brought down the economy because the job market is still very good. As you can see right here, the surge in labor costs, including wages and benefits, is a problem, but it's still the job market is still doing very well, and it's not hurting. As you can see right here, as long as this rate increases is not hurting the economy and bring down, as long as it can bring down inflation, then the economy isn't showing many symptoms of being hurt. Okay, and let me see what else. January the 12th, which is a couple of weeks away, less than a couple of weeks away, it will be the next release of the Consumer Price Index. And yeah, and depending what are the result of the CPI, the CPI kind of can determine where all the mortgage rates are going, the Consumer Price Index. So if the the official inflation rate right now is you can make the argument is around 8%. It's still very, very high. If the CPI that's going to come out January the 12th is lower, keep getting lower, then we are very hopeful that the interest rate will come down, at least not going to go up. So and so my takeaway from this article by Mortgage News Daily is that hey, we can look at a short-term history the past few years, the people that pulled the trigger, the home buyers and the investors. You guys did very well. I mean, you're not out of the woods yet. They're depending on where you bought. By the way, real estate, there's no such thing as a national real estate. Real estate is very hyper local. So you have to target specific city, specific region, specific neighborhood, and specifically the house and an APN. APN is a lot number. That's how you pull the trigger. So again, so just there's a lot to say. So my takeaway is we have done well during the pandemic boom, and that remains to be seen. Hopefully, you're still maintaining your value. American dream is still alive and well. Be optimistic. If you have the ability to buy a primary home, right now is a very good time to buy because of the especially when you buy a new home from a builder, there are a lot of incentives that allow you to buy down your rates. There are some discounts available. If a seller is willing to sell their home, you could negotiate for this little bit of a discount. So the pendulum have temporarily shifted to buyers having more leverage as opposed to what happened a year to 2 years ago. So if you if you have a good job stability, if you can afford it, even with the interest rate the way it is now, you have good cash reserve. If you're gonna stay at your home for at least 7 to 10 years, who's gonna argue with you that you should not buy a home at this time? Okay, so you buy a home because you love the area, you love the house, you want to build your family, you want to stay there for the long term. So just focus on your family and your long-term goals, and don't get paralyzed by this fear porn, the clickbait real estate videos that is all about negative headlines and doom and gloom. So those YouTubers are doing you guys a disservice by brainwashing and distorting and manipulating people's behavior, thinking the housing market is in a total free fall and the world is coming into an end and it's crash videos, free porn. So myself, I like to be transparent. I have a core value. I'm not gonna manipulate anyone. I'm not gonna do any kind of clickbait, all those kind of things. I'm just gonna report great contents, great data support by data, hardcore data, and so I will continue to provide you with relevant real estate information on a weekly basis for primary home buyers and for real estate investors, the mom and pop real estate investors that want to create a generational wealth do buying cash, remote out-of-state turnkey cash flow, low-cost rental properties in prudent and low-cost entry-level areas in the best markets in the fastest growing markets in the country. Thank you so much. This is Si Win Yi, and if you enjoy this video, please see value. Please smash the like button and subscribe to my YouTube channel, and refer all the people you know into my channel, because I tend to give you the greatest content ever in an accurate way, in an ethical way, in a down-to-earth way. Thank you so much. I will see you in the next video. Have a nice day. Happy New Year. Happy holidays. Thank you so much. Bye-bye.